Charlie Gasparino is joining us, again, rejoined by Susan Li and David Asman, Deirdre Bolton. What do you think, John, on this sell-off and what's driving it?
Everybody knew it would be somewhat violent when they started unwinding the balance sheet, the Fed's balance sheet. I mean, Jamie Dimon, you go down the line, there was going to be a correction.
So
there was
this is a balance sheet issue.
Some of it is, and you get higher interest rates, thus you have what's going on here. But, I mean, I think if you take a look at the Dow and the S&P longer term, okay, not just since it reached its high, look at it from the beginning of the year or around look at it from the time Trump passed the tax cuts. Because it was right, or Congress passed the Trump tax cuts, it was right around that time that he started talking up trade war. The Dow has basically, not completely, but it basically flatlined. And I think some of what's going on here is a worry about trade and tariffs. And if you look at GM, you know, I don't cover GM that much. I have been lately because I've been covering a lot of Tesla. You know, GM and Ford, the automakers have not had a great couple of quarters because of tariffs, and that weighs on the Dow too.
And higher rates, right?
And higher rates because they have to finance your vehicles. And again, I will say it again that there is a potential if these tax cuts do not work according to plan to get even higher interest rates because the deficit blows out, and that's a big if.
This is my opinion, but I think it's pretty clear the tax cuts are working.
Yeah,
right?
I think so. Larry Kudlow says you haven't really seen the full effects yet either.
Well, Larry Kudlow works for the president. Of course, he's going to say that.
I mean, you can't argue
look at the corporate profits.
Right?
So far, they have, but you have to have it long term. And corporations, let's be real clear here. Are they hiring more, or they do more?
Of course, they're hiring more. Look at what's happening with the jobs we have in this country.
Have they done more buybacks or hiring?
Yeah.
They've done both, in fact, because they're financial houses. But the fact is that they're investing tons of money.
How much?
That's one reason why you have the jobs fact. It depends on which company, Charlie. The point is, why are there more jobs in this country right now than people looking for jobs?
With all due respect.
Wait a minute. Just answer that one question. Why are there more jobs in this country than there are people looking for jobs?
Why do we have?
Excuse me. Don't answer a question with a question.
Why do we have 1.7% wage growth? Which is exactly what Obama
the point is that companies are not only expanding; they are hiring. That's why we have. Excuse me. Can I answer your question? They're hiring people because they are expanding.
Why aren't they giving
them more wages? It costs money to hire people. It costs money to. Let me finish. It costs money to train people. It costs money.
Right.
One of the most important ways you can spend money is by hiring people. That's one of the biggest catalysts.
All right, guys, do you mind? You're arguing very eloquently, but Deirdre and Susan, if you just pipe down here, I do want to get into some of the political ramifications of all of this and what might have and who might have caused what. But Susan, first to you on what CEOs do. You know, when you go to the stock exchange, you go to these corporate events and all. Deirdre, you've done the same. A lot of them talk about the economy being the wind at their back, whatever the source of that this is what will embolden their behavior and their buying plans. But
thanks to the tax cuts.
Already you were saying that third quarter earnings might be impacted by some of the recent developments we've seen.
I think expectations have been winded back, especially for the technology sector, given what happened in the second quarter. Some big disappointments there. Facebook is one of them. And so I think
a technology name or two could surprise.
Could surprise on the downside. And they've run up so much, and the bar is so high at this point after the first 2 quarters of this year that people are thinking, well, at some point, law of large numbers kick in.
Well, let's explore that a little bit. Charlie, do you want to get it?
They're still hiring.
Could I
Thanks to the tax cuts, Charlie.
Please,
would you stop interrupting her while she's interrupting you?
I'm the one who interrupts around here. No, I'm kidding. But if she's right on the technology thing and some surprises there that could jolt folks, if you think about it, those technology names, the Apples, the Amazons, the Facebooks, even the Microsofts, I mean, they've been leading the parade here. And if you were lucky enough to have them as investments, they outshone all others, and you were looking like, Warren Buffett. Now, if they're going to fall on hard times, all of a sudden you're not feeling like Warren Buffett. People, when they see that, tend to sell.
And we have to define what hard times are. They may miss these really high bars that they have been hitting as far as profit growth and revenue growth. They are still all growing their revenue. They are also the ones that we're talking about. So Netflix, Apple, Facebook, they're still growing. They just might be growing less.
But even coming down to earth would be a jolt for them, wouldn't it?
Yeah. And, what's interesting about interest rates is you talk to the average person and they say, well, suppose you can put your money in a treasury bond or a 5-year or a 10-year and get like 3.5%.
Or a 6 month. And get more than 2.5% right now.
You're showing your age there because.
Yeah, I like shorter term.
But I'm just saying that there is a sort of trade-off here where, and that's how markets work.
But it is funny, right? I mean, to see full-page ads touting 2% on your money.
Right.
I mean,
I remember when they were 13%.
You were talking about Trump before attacking the Fed or saying they shouldn't raise rates. I can't remember the last president that supported the Fed in raising rates was Reagan back in the day, and he was right behind Paul Volcker. And back then, you got, what did you get on your CD? 18%.
Well, inflation was about that too.
Prime rate briefly got over 21%.
It was just an amazing time.
And also, one of the emails, I'm getting emails from folks like David Stockman, for example, people who say, "See, I told you." I mean, there are a lot of "I told you so's" going right on right now. You should take them with a grain of salt.
What did he say? I told you about.
Well, the point is,
he's been looking
Dan
for financial
Schaefer,
Armageddon,
David Stockman, all these people who are saying that essentially this is what he's been forecasting for years. It's finally happened. I think you got to sit back for a second and say, wait a minute, is a 1 1/3 drop in the Dow the end of the world?
And you know what happens, and maybe it's the 2008 experience, guys, and please correct me if you disagree here, but do you remember how and you covered this, wrote books about it, but that the sell-off compounded the sell-off and compounded the worries because the capital that the industry used, beginning with the banking industry, was evaporating before their eyes. So sell-offs tend to make situations worse insofar as...
But I feel like there was something truly rotten at the core of that, which was stronger.
And what I'm wondering about this is this sell-off, if it feeds on itself, going to feed on the fears?
Well, it depends on...
And I don't know what the trigger is.
That was a sort of unique situation where the bank's balance sheets, and you need banks to be healthy to control the money supply and everything else, to lend to businesses. Their balance sheets were insolvent based on what they were holding on their balance sheets.
And based on their stocks that were evaporating before that.
But even the stocks, that was a slow burn. I remember the Dow hit a high in December 2007, right as Chuck Prince resigned from Citigroup and Stan O'Neill was out of Merrill Lynch. People thought the Fed was going to inflate their way out, and you really couldn't based on the...
That's like the old joke, how did you declare bankruptcy? It was slowly, then suddenly.